The views and opinions expressed on this program are not necessarily those of this station, JVC Broadcasting Management, or its sponsors.
With so many people living longer, the fear of outliving your money becomes a reality for many of us. Will I be a financial burden? Will I outlive my money? How will I be remembered? My name is Neil Himmelstein, president of Main Street Planning Group. Please contact me by visiting mainstreetplanninggroup.com. That's mainstreetplanninggroup.com, or call 631-647-4694. I will introduce you to strategies that will guarantee you will not outlive your money, that can guarantee you will not be a burden on your loved ones. Through a collaborative approach, we will uncover solutions that offer tax-efficient strategies, lifetime income, and legacy planning, choice, organization, direction, and education. That is the code we stand behind. Contact mainstreetplanninggroup.com. That's mainstreetplanninggroup.com, or call 631-647-4694. And listen to me every Friday at 3 p.m. as I host the Main Street Code for Financial Success, right here on 103.9 LI News Radio. Good afternoon. Welcome to the Main Street Code for Financial Success. I'm your host, Neil Himmelstein, and we talk about code. We talk about choice, organization, direction, and education. We work with hundreds of financial advisors across the country, helping them with their insurance needs and their planning when it comes to life insurance, annuities, disability, long-term care. We talk about income for life and protecting your income from all the evils that can happen, whether it be nursing home care or assisted living or becoming disabled or passing away. But it's a very important asset to you to have us. And we like to quarterback with various team members to help you in your financial success. We want to help you build your financial team. So if your financial advisor does not look at the insurance issues, they may be great investment people or great mortgage people or great this or great CPA. I hope that they're great at what they do, and I hope that when you come up to other issues that they're being discussed and you reach out to us for professional advice. I could be reached at 631-647-4694. You can always visit me on my website at mainstreetplanninggroup.com. Today, we are very fortunate to have a special guest with us, Tim Kennedy from U.S. Mortgage. Say hello, Tim.
Thank you, Neil. Hello. Good morning.
Tim is not only a mortgage expert, he is what is it?
A certified reverse mortgage professional.
Certified reverse mortgage professional. And the funny thing about reverse mortgage is a very misunderstood instrument. There's a lot of press that used to be negative, positive, just like annuities. People don't understand what they are, so they think, so you hear from them, it's bad, reverse, it's bad, I'm giving up my house. All this misconception. But the one thing that I find very interesting and where Tim and I have come together many times and talked about is when you are near retirement or you're at retirement and you have your assets. Not all of us have a ton of assets, but the biggest asset most of us have is our home. Wouldn't you agree, Tim?
100%. Neil, homeowners over the age of 62 are carrying $8 trillion of home equity.
Wow.
I call housing wealth.
$8 trillion. Don't throw those numbers around because I'm hearing it on the news nonstop with the better bill, big, whatever. It's money's being thrown around like crazy. $8 trillion. But let's just talk about us, the Long Islanders. I run into many, many seniors, and a lot of them are single or married, and they have Social Security. They might have a small pension, and they're sitting with a home, and it's paid off. And why is it paid off? Because the old adage, going back to my parents and a generation back, and I'm 62, but the generation before me, the planning was pay off your house, make it to Social Security, put money away in retirement, and that was the American dream. But things have changed, and now people have paid off their house. Maybe they're just left with Social Security, and they have a house. If you could just picture it, the way I like to picture it is they think that they're basically poor because they're living maybe paycheck to paycheck or Social Security. But at the end of the day, they got a house filled with dollar bills.
Dollar bills.
Dollar bills line the walls. But the problem is you can't touch them. I had nightmares about this. Wow, this thing is worth $700,000, $500,000, $600,000, $800,000, $1 million. But guess what? I can't touch it.
Can't touch it.
All I can do is pay bills on it. So, yet I'm concerned. What if I get sick, or what if I leave the house to my children? But my children, what are they going to do with the house? One wants to sell it, one wants to live there, and the other one wants to rent it out because he's doing really well. That's typical. Mm-hmm. So all of a sudden there's controversy. And then if you have to sell it to break it up, is it still going to be worth that $500,000 or $1 million? Because the worst time to sell, as you know, is when? When you have to. So that's the worst time to sell, is when you have to. So reverse mortgages have changed over the years, too. There used to be a traditional reverse mortgage, and now there's lines of credit. There's all kinds of things going on in that particular world in mortgages. Can you talk about that a little bit?
Sure, 100%. So years ago, right, the thought process behind a reverse mortgage was a last-ditch effort to keep the senior in the home, right? So all they had to do was make it their primary residence, be over 62 and breathe, and they qualified for a reverse mortgage. And what happened? 9 out of 10 times, they still don't have the ability or the willingness to pay their taxes and insurance, and they went into foreclosure. Back in 2015, they created the Reverse Mortgage Revitalization Act that changed all those laws and guidelines. So today, the reverse mortgage is a much safer, user-friendly product for the senior homeowner. And you mentioned before the available line of credit. So think about this. So yes, seniors can access the equity in multiple different ways. They could sell the house and downsize. They could take out a home equity line of credit, but then there's a mandatory monthly payment. With a reverse mortgage, they have the luxury of both. They can take out a line of credit with a reverse mortgage and not have the mandatory obligation of paying that on a monthly basis, month in and month out, right? And they have the flexibility of using that line of credit.
Wow.
Yeah.
Now, what's the difference between a line of credit and a mortgage? Tell me, just basics, and not everybody's,
So great question. So whenever I start talking about reverse mortgages, as I always preface it this way, a reverse mortgage in 4 simple words, it's just a mortgage, Neil. It's just a mortgage, right? The difference between a forward mortgage, what I call a forward mortgage, your traditional forward mortgage, conventional FHA, and your reverse mortgage is, on a forward mortgage, you're obligated to make a monthly payment every month, right? And if you don't, you're in big trouble. With a reverse mortgage, okay, you have the flexibility of making monthly payments or not making monthly payments. And one of the biggest misconceptions about a reverse mortgage is the lender or the government is going to own my home. That's the furthest from the truth. You maintain ownership of your home. You're on title. It's always your house. You can do anything you want with it. Okay, you can renovate it. You can paint it. You can do siding, roofing, do anything you want, and you can sell it at any time. Also, it's just like a mortgage. It is a mortgage. The only difference is, okay, that loan will get paid back when you sell that home or the last surviving spouse passes away.
Right. But what's the difference in the rates, let's say, between, a reverse mortgage and a forward mortgage, as you call it?
Okay. So most reverse mortgages today are based on the SOFR. It's an annual adjustable rate, and those rates are anywhere from 2.5% to 3%. Okay.
Wow.
A 30-year fixed rate today is probably hovering. It's not terrible, right? But probably hovering around 3.25%. Okay. But the idea of the reverse mortgage is your payments are flexible. Right? You can make a payment. You don't have to make a payment. And if you do make payments, what happens is that just gets credited to your line of credit. So, for example, if you're making a $1,000 a month payment to your reverse mortgage, at the end of the 12 months, that means you have an additional $12,000 on your line of credit that you can use sometime later on in life. If you make payments to your forward mortgage, that mortgage payment goes right to the lender, right? And you will never have access to that money again. So again, it's all about flexibility and access to the equity in your home.
Yeah, and I find the interesting thing about a line of credit, from what I understand, is that you can take out a line of credit, but you're really not paying anything on it, nor is it accruing interest because it's a line unless you use it, correct?
Correct.
So just go into that in a little more detail for those that don't know.
So one of the best kept secrets of the reverse mortgage is the line of credit. The second part to that is that line of credit has a guaranteed growth rate factor to it. void of the value of the home or the housing market. So if the housing market is trending up, that reverse mortgage line of credit, the unused portion of the line of credit, will also increase. If the market has a downturn and the house value is going down, that reverse mortgage line of credit has a guaranteed growth rate factor, and it will still continue to grow in an upward fashion.
Wow, that's interesting. I want to get back to you on that. You're listening to the Main Street Code for Financial Success. I have Tim Kennedy with me from U.S. Mortgage. Tim, how can they reach you?
My number is 631-750-0520. 631-750-0520.
And we're going to be back with Tim right after the break. You're listening to the Main Street Code for Financial Success. Neil Himmelstein here at 631-647-4694. And we'll be right back. Thank you. Welcome back. You're listening to the Main Street Code for Financial Success. I'm your host, Neil Himmelstein. With me today is Tim Kennedy from U.S. Mortgage. He is a reverse mortgage specialist. He also does forward mortgages and reverse lines of credit, which we were talking about before the break. And you were explaining real quickly on a reverse line of credit, you only get charged when you use the money. So the money can actually be sitting there kind of like available to you.
Mm-hmm. Yes, sir. Yep.
Without having to use it, but all of a sudden you have an emergency, it's there for you.
100%. So it's an available line of credit. You're only paying interest on the money you're borrowing. So
Excellent.
If you had a $300,000 line of credit and only use $50,000 of it, you're only paying interest on the $50,000.
Right.
Okay, and the other money is sitting on the line of credit with a guaranteed growth rate factor. So that other $250,000 is actually increasing as it sits there.
Wow. And is that interest deductible also?
No. It's only only if you're making payments. Yeah.
Oh, I'm just asking.
But the money, the money you're drawing from that line of credit is tax-free. So the idea, when I speak to financial planners, the idea is protecting the client's portfolio.
Gotcha.
So if they're taking money out of the portfolio, they're diminishing their portfolio, and they're probably going to pay taxes on that money.
Right.
Instead, they can take out a reverse mortgage, use the money on the line of credit. It's tax-free. Let their portfolio grow.
Right. Now, you mentioned financial planners, and you know, I talk a lot about life insurance, long-term care planning, and doing that. And being able to free up the money out of your home allows you to purchase these products and allows you the protection and actually protects the loan from your children having to pay it back, because basically if we insure it, it's all good. Tell me how that all plays into fact. Well, you have a great story with that.
It's funny you say that, because we're all in the same boat. Like when you did your introduction earlier, where we're talking about helping seniors or retirees plan for a safe and secure retirement. I always talk about the 5 L's, and it incorporates what we do for a living, you with insurance and financial planners and elder law attorneys and estate planners, the 5 L's. You know, most seniors or retirees, I should say, are concerned about longevity. They're going to outlive their money. Okay. Yes. They're concerned about liquidity. You mentioned it before. Yeah, they're sitting in a $500,000 house or $1 million house, but they can't touch that money, what I call housing wealth. Or they may have a nice portfolio, they don't want to touch it. Right? They either want to leave it for their children or they're saving it for later on in life because they're concerned about longevity. So you have longevity and liquidity. You also have lifestyle. You know, we're going to work 30, 40 years pretty much, right? We buy 2 cars, we go on vacation, we go to dinner, we go to movies. You know, we have that freedom because we're working and we're generating income. When we retire on a fixed income, why should our lifestyle change?
Right.
Legacy. You know, we all talk about legacy. A lot of times we talk about legacy and what we're going to leave our children when we do pass. But there's the flip side to legacy. How do we want to be remembered before death? Right? Are we going to be a burden? Are our children going to be the ones that are picking us up in and out of bed, on and off the toilet, or spoon feeding us? Right? Is that how we want to be remembered? Legacy. And the last one, and we talk about it all the time, is long-term care. I think the percentage is 70% of us are going to need some sort of long-term care later on in life.
Right.
Longevity, liquidity, lifestyle, legacy, and long-term care. I'm not saying a reverse mortgage is the end-all, save-all. What I'm saying is a reverse mortgage is one of many products that can help us or help retirees and senior homeowners age in place, maintain financial independence, and plan for a safe and secure retirement.
Wow, I couldn't have said it better myself. That's fantastic. Well, let's get back to legacy for a second, because it's very interesting you say that. And I said it before in the program, but I want to reemphasize it. I run into many people, many advisors come to me with senior citizens, and they may have 2 or 3 children, and they want to make sure that they're not a burden to their children. That's a big deal. I mean, you hit every L I could imagine. They want to make sure they're not a burden. But they also want to remain in their house. I think that's priority number 1. Nobody wants to go to the bad place, okay? Nobody wants to go to the bad place. So how do we do that? How do we prevent that? And one of the biggest tools we have is talking to somebody like Tim, who can set up a reverse line of credit. Why is that so big? Because now we'll have the liquidity, right? Mm-hmm. Is that what I'm understanding?
Access to liquidity, yes.
We'll have access to liquidity. And liquidity is important because if I have a long-term care event, or if I don't, I want to stay in my house, or if I have a long-term care event and I don't have one of these, where am I going to get the money to take care of me? Or what if a tree falls on my house? The insurance is going to cover some of it. Mm-hmm. But what am I going to do? I had a 80-year-old young woman years ago who had a renter upstairs and had a tree fall on the ceiling of the house. It was just unbelievable.
So the idea is they have access to the equity in the home, the housing wealth, to care for those things. You got to remember, like a reverse mortgage really is almost like an insurance product, right?
Right.
The money's there; it's available to them for if and when they need it for the now what and the what if.
And they could take some of that money and actually insure the legacy. And I'll tell you where that's come in handy. We've had situations where people have 3 children, and like I said, they want to leave their house behind. That's their legacy. They don't, But one kid's living there maybe, or wants to live there. One kid needs the money. He wants to sell it and get whatever he can when he can. And the third kid is, their family is doing very well. They kind of want to rent it out and figure it out later, but, make it an income producing asset for them. So all of a sudden you have these 3 children at death, let's say, and they're going, okay, what do we do with the house? Well, the only solution is maybe to sell it. And when you sell it, when you have to, you don't get the best value. It just becomes a lot less. The legacy becomes a lot less. But sometimes if we can use that money and we insure it, it's better to leave cash behind than to leave an item behind, and that can be easily divided. And with the complements of a home equity line, you can leave both behind. You can leave it all behind. You can have the life insurance protection that your children can split up. You could have long-term care protection from the money you've maybe gotten from your equity line. So you freed up liquidity. So in case you have an event, okay, insurance is going to cover it. In case you pass away, there's a check. And then, by the way, you still retain ownership of your house and leave that behind as well. So the best thing to leave behind anybody is cash, I would think. So we can make it so you can leave cash, and in combination, and again, it's not a solution for anybody, but I recommend almost every senior client, whether they have a lot of wealth or don't have wealth, to take out this line of credit, which costs them nothing, right? Or does it cost them a point or something?
Well, sure. No, there are closing costs involved. So a home equity conversion mortgage, a.k.a. reverse mortgage, is a federally insured mortgage product with the FHA and HUD. So there are closing costs. There's upfront mortgage insurance. There's title costs, recording costs. There's a bank origination fee. So, yes, there are closing costs. But the idea is this reverse mortgage is a safety net. For the now what, or the what if something were to happen. And if nothing happens, no harm, no foul. the children sell the home, and whatever remaining equities in the house will be split amongst the heirs. You're mentioning those 3 children. It's funny. My phone rings every day with people looking for reverse mortgages. You know who's calling me?
The children.
The children.
Yeah.
Because they're concerned the parents are running out of money, and who's going to have to foot the bill?
Right.
The children. So now they're looking at this house with all this equity, and they're saying, how can we access that to help my parents stay in the house? Their goal is to be carried out feet first. They want to live in that house for the duration of their life.
Now, clearly, this is not the only thing Tim does. He does forward mortgages or regular mortgages as well.
Oh, yeah, I do those too, Neil.
Just
yes.
want to let you know. And listen, he's part of the solution. And that's what we do. We have a team of financial professionals we work with that call us. We help quarterback that team, get you to the right person who's going to give you the right advice and the right information and get you situated. You're listening to the Main Street Code for Financial Success. My guest, Tim Kennedy, is with U.S. Mortgage. You can reach me at 631-647-4694 or on my website, mainstreetplanninggroup.com, where I have lots of videos and we could share information with you. And Tim, how can they reach you?
Sure. My number is 631-750-0520. Again, it's U.S. Mortgage Corporation. It's 631-750-0520.
Have a blessed day, everybody. It's a gorgeous day on Long Island. Nice and listen, have a wonderful Thanksgiving.
You too, Neil. Thank you.
The views and opinions expressed on this program are not necessarily those of this station, JVC Broadcasting Management, or its sponsors.